On December 5th, 1996, then Federal Reserve Chairman Alan Greenspan gave a famous speech in which he said, "How do we know when irrational exuberance has unduly escalated asset values, which then become subject to unexpected and prolonged contractions, as they have in Japan over the past decade?" Has famously become known as his irrational exuberance speech, and while it resulted in a sell-off in the stock market the following day, the market actually continued to rally for another 3.5 years into the tech bubble, of course. I was reminded of this speech this week by a couple of items. First, on Tuesday, one of the tech bubble's biggest cheerleaders, Abby Joseph Cohen, was interviewed on CNBC, and she was her normal self, and she said, the market can continue to go up. Fair value is $1,250 to $1,300. If it gets to $1,250 to $1,300, she'll say fair value is $1,400. So I thought that was somewhat interesting that she was on right as the market is approaching new recovery highs. And the other item that made me think about that speech was a really great article by John Hussman of Hussman Funds in this week's Weekly Market Comment. The title of that comment is "The Rubber Hits the Road," but the gist of it is that speculation has become an increasingly important component of stock market returns over the last 15 years. Prior to that, valuation and fundamentals played a bigger role, but the role of technicals, trends, and market internals has been really at the forefront over the last 15 years. And one really interesting passage, he says this: "Over the past decade, it has been an uncomfortable lesson to accept that investors can be relied on to behave in ways that are ultimately unsustainable and destructive to their wealth, as long as market internals are temporarily supportive. It's one thing to say, from every historical precedent, we know that this is going to end badly and investors will lose a great deal of their wealth. But for now, they are speculating anyways. It's another thing to add, and since they are, we are actually going to rely on investors to continue behaving dangerously and join them." Turning to the current market action, the bull market reached its one-year anniversary on Tuesday, and we're currently approaching the recovery high of 1150 on the S&P 500. Just last week, I was saying that I thought we were in a range defined by the lows of February 5th at 1050 and the highs of January 19th at 1150. But lo and behold, here we are pressing up against the highs already, with the S&P closing at 1146 yesterday. Now, should the S&P 500 break through 1150 convincingly, talking about a surge through that on strong volume, it would imply that there's another leg up in this bull market. And for me, it would really raise that question that Hussman raises, is maybe it's time to speculate in some limited way on the upside. That said, 1150 does represent substantial resistance, and so it might very well not be breached. Either way, this should be resolved in the next few weeks.